Hi, I'm Major Berman with the Mortgage News Network. We're here in Times Square for the MBA National Secondary Mortgage Bankers Conference. Joining me is Eric Bowlby, who is the CEO for AmeriFirst Financial. Eric, thank you for joining us.
Thanks for having me.
So listen, I want to ask you, what's the your takeaway so far from this conference, and what do you come back to the MBA secondary for?
So we primarily come out to the secondary to find out what's new. What are the new products coming out? What's everybody changing? Learn about what's going on in the industry. And mainly just meet with all of our vendors while we're here, right? So we can meet with 50, 60 different of our people we do business with and get it all done in one swoop.
Fantastic. Great. Glad to hear that. So now tell me, how's 2016 been for you guys so far as a company?
You know, I think everybody who's been in the business 2016 is just smiling, right? The last couple of years, if you're in the mortgage business, it's kind of like printing money.
Agreed. How do you see the future? Do you think this is going to continue the great growth that we've been having?
I think we're going to see a consolidation. I think there's a lot of ownership that's out there that is getting to the age of retirement. I think there's a lot of hedge fund money. I think there's a lot of big banks wanting to buy up more market share. So I think there's going to be a lot more of that. I think a lot of the littler guys are realizing that they're not large enough to really compete and do it right. They can't afford to do things compliance related in today's regulatory environment. So I think, although it's going to be a fantastic years, I think we're going to see more and more consolidation going on.
Yeah, that's a good point. Now, we were talking a little bit before about the protect your transaction. I believe you call it the PYT. That's something that's unique that you guys have. Talk a little bit about that, because I've never heard anything like this in the mortgage business. It sounds wild.
So yeah, they originally came about, started a couple of years ago because in Arizona we had a problem with not enough inventory. Mm-hmm. And your FHA buyer couldn't compete with your cash buyer because we had a lot of cash buyers. Investors were coming in, flooding the market, buying up everything, right? So how do I get my FHA borrower's contract accepted? How do I stand out from the cash? Because cash is always cheaper, right? But people want the for sure thing. So we came up with this program where we guarantee, or the attorneys like us use, where we assure that this loan is going to close. If we fail to close the loan, the borrower receives $10,000. Borrower is the only person who we can actually give money to without it being a arrest violation.
Right, sure.
Now, the borrower, however, can assign his interest in this policy to whomever he wants. So you want to strengthen your offer. You want to tell your seller that you're real. Provide him with a PYT certificate that there's $10,000 guarantee. Assign it to the seller. If I fail to close, there's an additional $10,000. That I'm going to put in as earnest money. Now, you're the seller, you got an offer that's FHA, but has a $10,000 guarantee or assurance coming from the lender. How much more likely are you to accept that offer than you are to accept the cash offer that's less money? Right? So that was really where it originated from, was we were trying to help our borrowers stand out. And then we found out it was we call it the Trojan horse, right? Because as a real estate agent and a fiduciary, if you're aware of such a product, you don't tell the consumer about it, 15% of all close of escrows fall out due to lender error. Right? So you got a 15% chance something's going to go wrong. Do you really want to be liable for something to go wrong, or do you want a mortgage company puts their money where their mouth is?
As a real estate agent, you have an obligation to tell your sellers about this, and you want all your sellers to have this opportunity.
You've been in the business a long time. What's a pre-qual really worth? Do they hold weight? Do they get if it doesn't close, do you get to go back after the bank?
And it's certainly nothing actually close to what a cash offer is.
Right.
Yeah. Great concept. It sounds like it's further than a concept, and it's good. I'm sure you're going to be having a lot of success. Is this something you could launch nationally, or is this something specifically for the home state? I know you guys do a lot of business in the West, but is this something that you could launch nationally?
So we're not licensed in every state. So for us personally, could we launch it nationally? No. Could we take it and offer it to other companies in other states and provide the back-end support, not underwriting docs and funding, but of how to put the paperwork together, how to make it legal? Sure. Yeah.
Fantastic. Great. Well, listen, thank you for sharing that idea with us. Really appreciate it. And thank you for joining us.
You bet. Thank you.
And I'm Major Berman with the Mortgage News Network. Thank you for watching.
This is Mortgage News Network.